Hello guys, in this video I'm going to share a private tool that I've been using for some time now. It's a real-time data that moves the financial market that many traders ignore. It has delivered the most consistent results in my trading journey since the past 2 years. At the end of this video, not only will you learn how to trade with confidence, you won't trade based on guesswork. You will learn how to use a strategy that combines the precision of ICT with the real-time edge of currency strength meter. So stay tuned guys, subscribe and watch till the end. First thing we need to do is a two website that we need to use, which is TradingView and Currency Strength Meter. So you just have to go to your Chrome and search in marketmilk.babypips.com currency strength. So it will take you to this place. It's a free tools, but they also have paid plan, but you don't really need to pay because the free tools is enough for you to do whatever thing you want to do, get the information you need to get, and know the daily buyers. Let me explain to you guys how this works. So this currency strength meter it gives you real data of the daily market. If a particular pair is strong or a particular pair is weak, it tells you which of the market is weak and which of the market is strong. Either are you buying or are you going to sell? So it just gives you the trend momentum. It gives you so many information that you need. So it gives you the daily buyers of today. So why? Because this is one day. So it's telling you the currency that is strong today and the currency that is weak today. So if I go to 1 week, it gives me the currency that is strong this week. And this week starts from Monday to Friday, and today is Thursday. So that means from Monday till this Thursday, US dollar has been strong. While Australian dollar this has been weak, like is the weakest among all the currency pair. So same thing goes to CAD, like for the week. Look at it, this is 1 week. So when you go to 1 month, it shows you that from the beginning of this month, which is the 1st of July, US dollar has been strong, while Japanese yen JPY has been the weakest against all currency pairs. So like the major currency pairs though. So JPY has been the weakest against all currency pairs for this month. While CAD is the second, Australian dollar that was the weakest in this week now is the third in the month. So I would just say, let me just go for a year. Then from the beginning of this year, CAV, Switzerland franc has been the strongest. While the US dollar that was the strongest in the week and daily now is the weakest for the overall of this year, like from the beginning of this year till now. So like the overall trend from beginning of this year to now, US dollar has been the weakest. So this thing is just like multi-time frame. It depends on how, every traders are different. We have the scalp, the intraday trader, we have the swing trader and all of that. So but based on my own strategy and based on the purpose of this video, you are going to be using a daily time frame so you get the bigger picture of what I'm trying to explain here. So right now, for you to know the daily bars, for you to know if today I'm going to buy or today I'm going to sell, it's just showing in front of you. You are trading the strongest against the weakest, and whenever you trade the strong against the weakest, you are on the right track because strong currency of the day. Whenever you pair currencies that has the same momentum or the same strength, it's a ranging day. Whenever you pair euro and odd, it's a ranging day. Same thing goes to CAD JPY, ranging day. Same thing goes to US dollar, GBP, it will be a rangy day because the both are strong, and while here the both are weak. But whenever you pair the strong one against the weak, it's a trending day. Same goes to this, and this, it's also a trending day. Okay, let me give an example. When you trade the strong base currency against a weak base quote, you get this type of daily candlestick or weekly candlestick or monthly candlestick or yearly candlestick. So when you trade two both strong currency, either base or quote, this will be a ranging market, and this is how the candle would be, either daily, 4 hours, 1 week. So this is just how it will be. So when the weak currency is the base currency and the strong currency is the quote currency, so this is the candle you get. So this is the candle you get because let's say for instance you are trading GBP US dollar. You know, GBP is the base currency and US dollar is the quote currency. So now let's say the GBP is weak for the day or for the week, and US dollar is strong for the day or for the week or for the month, whatever. So this is what you get. You get a daily candle or weekly candle or monthly candle that would be red. It would be a downtrend. So same goes to here when the base currency is strong. You are trading the base currency against the weak quote currency. So this is what you get. Why this one is when you are trading both weak currencies, you'll be getting this, and when you trade both strong currency, you'll be getting this. So the key to this, because in the financial market we only want to trade a trending market, so it is very sensible enough for you to trade the strong against the weak so that you have a trending market. But when you trade both strong currency or both weak currency, it will be a ranging day. Now let's dive into the chart so you know what I'm talking about. So let's say for instance I want to pair GBP JPY. Okay, so which is this now. Let me go. Yeah, and based on its ICT, right? So once you go into the chart, into your chart, you need to search in TTM, search TTM is higher time frame candle overlay power of 3. Now this by the tick magnet. So it gives you like this is for daily, it gives you the daily candle. This is the daily candle. When you come to settings, when you go to settings, you see the time frame is 1 day. So that's just what we need. Now this is on Thursday, and this is on Thursday. You know, this candle now just opened newly because it's Friday. So you just ignore this because this is on Friday, while this is Sydney Open. So but if you look on this currency strength, now you can see that GBP and GBP was strong against JPY on Thursday. So this is how it goes. You can see this is a trending market. You can see the trending market. Now let me go to 5 minutes so you know what I'm talking about. So now the market opens from this place. The market opens from here. So let me say the market opens from here at this point. Okay. Market opens from here, then it went down to create this week. This week you are seeing. It went down to create this week. Then it started going up and started creating higher highs and higher lows. So there is also another tools you need. Just go and search on price action smart money concept, which is this price action smart money concept. So it would you will see this one, this one. Now, how can you combine these both together? Okay, so based on we already have a bias, like a we already have we already know that we want to buy, you get. So because we are trading the GBP, the strong against the weak, so we are not thinking of selling, we're just thinking of buying. Okay. Now, once the market, once the market, um, it will be creating higher highs, higher lows, higher highs, higher lows. So whenever the market break a new structure, whenever a market breaks a new structure, there are good points to buy because you'll be seeing volume. These are volumes. They are good spot to buy. You buy here, you can buy here. This is liquidity grabs. So you can buy at this point. Buy. You just always buy low and sell high. You get. So this is just how simple it is, and you can add it to your trade. It gives you this add edge. Like you just not trade when you're not supposed to trade. So the reason why this thing changed this way is because the Sydney has opened. So this is on Friday. So the Sydney has opened, but me, I'm using this is African time. This is West African time. So that is why. But this is the open of Sydney. That is why the thing automatically changed. You can see this is real time, and this is if I said close. Now it will show me yesterday. This is on Thursday now, which is closed. This is that Thursday. Look at the Australian dollar. Now um let's go to GBP odd. Now this is GBP odd on Thursday. You can see Thursday, and the market has been uptrend. You can see it's creating higher highs, higher lows, and all of that. So you can implement it on your charts, on your tools, and it gives you you don't trade based on guesswork. You trade based on what the data is showing you. It shows you, it gives you an edge. Yeah, many people don't know this, and many people don't know how effective it is and how they can use it and how they can apply this on their chart. So um, I think let me show you one thing about like what I'm talking about, the ranging market. Let's say GU now, GBP US dollar. Now come and see how GBP US dollar will be ranging, which is on Thursday. GU, you can see how it was ranging. Now look at the let me show you so you'll see it clearly. This is on Thursday. You can see how the market was ranging. You can see the ranging market. The market was just ranging. It's not a trending market. It's not um like it's just a ranging market. Why? Because the both of them are strong. Both of them are strong. You can see. So that also goes to when you trade the weak against the weak, and when you trade all these, which is these ones that are not strong, neither are they weak. It also shows you. Okay, I can still show you another example. Now let me say carve card. Carve card. Oh, sorry, carve card. So I want you to see the ranging markets. So you just have, it's a very very good way for you to trade. Like you just know when to buy and know when to sell. People don't need to even tell you. You don't even need to look at the chart before you know what is happening in the market. Now look at the ranging market. You can see how the market I was just ranging, ranging on Thursday. So this is what I have to say, and this is the information I need to share out. I've been using this now since 2 years now, and it has given me some good consistent results. And you can also, if you're not really if you don't really understand ICT, at least with these tools that I showed you now, you can really know, you just need to know the basic, and then these tools will help you figure out the rest. But you just need to know the basics, like change of character, break of structure, liquidity, and all those stuff. But these tools, this indicator that I implement on TradingView now, that I showed you um, by Big Beluga, price action smart money concept. So it would help you. Same goes to TTM by, yeah, the power of three by the tick magnet. So yeah, that's it for now. And if you find this video helpful, please don't forget to like and subscribe as a payback. So whatever thing you don't understand or whatever video you would like me to do, tell me in the comment section so that I can share more on this currencies trend meter and ICT. Peace guys.